Good evening, everybody. I am honored to be before you this evening. My name is Courtney R. Logan Esquire. I am the creator and founder of the Powerhouse Trading Group, and I am known as the US30 King. Now, we're going to talk a lot about the US30 this evening. First of all, let me welcome you onto this particular call, wherever you're calling in from. I know some of you may be new. We're going to try to make some of these concepts make sense to you. Some of you have been trading for a while now, and you know a little bit about the US30, and you've seen some of the things that I've been able to do with the US30, as well as others. I'm not the only person that trades the US30. In fact, there are other great traders that I know personally, friends of mine, that do very, very well trading the US30. So one myth that we're going to dispel tonight is that there is one way to trade. That is not true. There are millions of ways to trade. The problem that I see with most traders is not that their strategy does not work, that they don't have the understanding and the foundation they need in order to be successful in this market. So hopefully some of the things that we work through this evening could help you in your trading, all right? Especially when talking about trading the US30. So there's a few things that we're going to do tonight. We're going to talk a little bit about me and how I became who I am as far as a trader and my progression to not working in corporate America anymore. We're also going to talk a little bit about what is the US30. Everybody's talking about it, but do you know exactly what you're doing? I am a firm believer that we should understand the fundamental, foundational understanding and have that when we're talking about trading or being a trader. So I want to help you with that this evening. Also, what I want to do is I want to talk about a prediction that I made in April. All right. I want to talk about a prediction I made in April. This is the second time I've made a prediction. Some of you may recall back in October, in my basement with some of my elite members, I called a 80,000 pip move, all right, to the downside. We got about 45,000 pips out of that particular move. I got about 66,000 out of that move off for multiple positions, all right? There is a method to the madness. That's what I want you to understand. That's exactly what I want you to know. There's a method to the madness, all right? What I want to do is point you into the right direction. There is no way, please hear me, please hear me. There is no way I can teach you to trade in one night. There's no way that I can teach you to trade in a weekend. There's no way that I can teach you how to trade in a month, not the way that I trade, all right? This trading game is a real skill set. Just like a plumber or electrician or me being a lawyer, it takes time to build and develop a skill. Most of us are still developing that skill set. We're still learning. We're still taking in information. We're still paying for classes and looking for mentors, just like some of you. So don't feel like you're alone out here in the trading world spiraling out of control. You're going to be okay. All right. You're going to be okay because there are great traders in this particular market and in this space that will help you learn how to trade. We hope that the Powerhouse is one of those places for you. So a little bit about the Powerhouse. I started the Powerhouse back in August. It was an opportunity for me to provide Forex foundational understanding to the world, all right? Right now, the Powerhouse has over 28,000 people in it from over 120 countries. We offer high quality value content for free. I'm gonna say that one more time. We offer high value content for free. Why do we do it? Because we believe that the foreign exchange market is indeed the next wealth transfer. We do believe that. And we also believe that if we have something of value, we should share it with one another. That's why I'm here this evening. I'm going to share some valuable information with you. And hopefully in return, as you build your skill set, you will share valuable information with other people. This is reciprocal. The more value you put out, the more value you will get back in. So hopefully, the work that we do in the Powerhouse, the work that I do personally, the work that we do through our mentees, the work that my mentor, Mr. Clint Eastman, is doing out in the world is infectious and contagious. We really want to start a revolution, a financial one that actually can build generational wealth for you and your families. So good evening, everybody. Welcome on. I'm excited to have you, and I'm excited to work through some concepts with you. First, let's start with a few of my pet peeves. I think this is really important. Number one, take good notes. I want to help you, okay? US30 is not Forex. This is very important. This is very important. This is very important. US30 is not Forex. A lot of us have come into the financial arena through the Forex door. That's okay. But we don't understand that there's other markets out there and other asset classes that we can trade, such as equities and indices and bonds. Forex is the currency market. All right. Forex is the currency market. All right. The US30 is a group of or index of stocks. It's not a pair. It's not a pair. All right. I hear that all the time from new traders. All right. US30 is not a pair. It's not a pair of anything. In fact, it's a collective or group of something, that being 30 stocks. We're going to talk a little bit about the history. I'm going to walk you through how it's a weighted average. But US30 is not stock. I mean, it's not Forex. It's stock. Number two, US30 is the top 30 stocks. Okay. We're going to talk about which ones they are too. I'm actually going to tell you which ones are the most important. I'm going to tell you which ones they're actually the most important. All right. I'm going to help you. I'm going to help you so you understand what to go look for when you're looking to trade the US30. All right. We're going to talk about that. All right. So it's not Forex. It's the top 30 stocks. This is important. This is important, especially when you go to when we start talking about how money flows through the market. It is very important. It is very important that you understand this particular concept, because if not, you will get it confused and you will get lost as you build your understanding. So it's important for you to know this. It is important for you to know this. How did I get here? I think that's one of the most important questions for me, and maybe that can help you and some of you new traders. About 2 years ago, I found Forex. I had a friend that was trading the foreign exchange market. She was very successful in her own right. And I was trying to figure out how could I generate an additional stream of revenue or income into my life. I found iMarkets Live. I have no problem saying that. I enjoyed my time in IML. I learned a lot of information through IML Academy and my chairmen, Mr. Carlos Wiley and Mr. Dr. Raphael Spiller. I took that education and I left the company and I started the Powerhouse, and I was introduced to Mr. Clint Eastman. Clint has been my mentor up until this point. He's taught me things about the market that I didn't understand before, such as volume, order flow, currency flowing throughout the market, risk on, risk off profiles, option expiry, options as insurance. There's a lot of different concepts that he has placed inside of me that helps me to be a better trader. All right. What I understand now is that I didn't know what I did not know. And as you learn and as you become more proficient as a trader, you will find out the more that you know, the more that you figure out that you don't know. All right. Interestingly enough, December, almost 2 years ago now, 2 years ago, I had my first trading lesson on this screen right here. All right. This screen right here. We had just done an opportunity presentation in my home, and I was learning about the Ichimoku cloud right here on this particular screen right behind me. That was my start. That was my first strategy. It was the Ichimoku, the money flow, and the RSI. And that was my first strategy. And it was off to the races for me. I was so intrigued about this market. I was so excited to learn more, and I never stopped learning since. Here's the next point. You cannot put a period where you should put a comma in your education. It is very important that you understand this fact. Some people have settled in on a strategy and they have not continued their education in other realms or other areas that they need in order to make the strategy effective. It is very important that you understand this financial world in its entirety, not just a small piece of it, not just a small piece, right? A lot of us will say mindset is the most important. but we'll spend 90% of our time on our strategy, but spend 5% of the time on mindset. Or we'll spend 5% of the time on understanding what this market really is. In order to trade this effectively and consistently, you need a deeper understanding, because there's a lot of factors at play when we talk about the US30. And I'm going to show you that. We're going to look at that. And by the time we get through, you're going to understand there's a lot underneath this particular asset. It's very important that you understand that as well. So let me show you something really quick. This is the chart that I drew on April the 29th. I believe it was actually April the 30th. If you look up here in the top right here, it's if you look at the top left, it's April the 30th. April the 30th, 2019. 6:40:14 UTC time. All right. I drew this. All right. I drew this, and I do these monthly for myself. All right. I actually got one right now. Okay. And it was my understanding, based on my background understanding and foundation of the market, that US30 would be dropping, right? But I had it dropping to a particular place based on my understanding. You will see that I actually drew at the bottom down here, I drew a volume node. We'll talk a little bit about volume and why volume is important. I drew a volume node down here because I knew, based on my understanding, that this volume node in May should be bigger than the one in April. That's all I was trying to demonstrate here, that the volume node in May should be bigger than the one in April. I'm going to tell you why that's important. I'm going to tell you how I got there. We're going to walk this thing down. We're going to talk about this particular chart, and hopefully it points you in the right direction in the future for the things that you do. You might have something that works for the US30 already. It doesn't mean it can't be better. It doesn't mean it can't get better. All right. We are always students. Adeze taught me that. I took it to heart. Some people didn't. I kept learning. I'm still learning. And this, hopefully tonight, is educational for you, so you can continue your educational process as well. So let's talk a little bit about the US30. Let me pull up my slide. What is this thing? Let me give you a little backstory. All right. I was trading one day. I went on Facebook, and it was back in the time when everybody was posting profits, because everybody asked me this question: How did you find this? How did you start doing this? People were posting profits, and I checked somebody's screen, and they had at the bottom, they had Nike, and they were trading like Apple, and then they had this small little symbol called US30, and it was only like $20 in profit. I had never seen it before, so I was inquisitive. So I thought I would go to my MetaTrader 4, I will type it into my screen, and I'll see what it does. I don't know what it is. I still didn't know what it was, and I put it in. I put it into my demo account. It exploded, literally exploded. I had never seen anything move that fast. In fact, I was trading Ripple. I was trading Ripple and Bitcoin at the time, and it was moving faster than Ripple and Bitcoin. I could not believe myself. I couldn't believe what I was seeing. So I kept trying it. I kept trying it. I kept testing. I kept testing it. And I kept losing. I kept losing. I kept losing. But I knew I had found something because of the opportunity. If I could figure it out, if I could really, really nail this thing down, it moves so fast, it's an opportunity to make a lot of money. That's all I thought. That's all I knew. That's what I started doing. So I started testing it. I started adding things to it. I started creating a strategy because what I had wasn't working exactly the way that I wanted it to. I was missing out on moves, or I was too late. And eventually I came up with the King's Gambit. I came up with the King's Gambit. The King's Gambit. This is important because it was 13 indicators. 13. I had 13 indicators on my phone, not on my computer. I had 13 indicators on my phone. Ask anybody, they'll tell you. I promise you, it was 13 of them. I didn't know I could fit so many on there, right? The reason I had 13 is because it moved so fast, I was afraid of it. Let me tell you, healthy fear is important. Because if you don't have fear of the wrong things, it could be damaging to you. So some of the indicators that I had were duplicative. They did the same thing in different ways, but it made me comfortable. Always remember, it doesn't matter what somebody else does. It doesn't matter how somebody else trades. It doesn't matter how people do support and resistance. In the end, it's going to be about what makes you comfortable as a trader. That's the most important part. All right. What do you see? What do you need? That is the most important piece about trading, because when you're in your trading room or your office or your trading terminal, wherever you trade at, there's nobody there but you in a chart. There's nobody but you in a chart. All right. So it is important that when you're looking at your chart, you're comfortable with what you're looking at. And when you execute a position, you're comfortable. You're comfortable in your analysis so you can sit in the position. So now I don't have 13 indicators anymore. All right. Now my trading now is focused in the area of volume. All right. All of my analysis, the majority of my analysis, the core of all that I do. It does not mean we don't use indicators. It does not mean you can't have a different trading system. In fact, I believe this is the foundation and fundamentals of trading. This volume is the foundation and fundamentals of trading. I can prove it. Before you had a computer, before TradingView ever existed, before there was Hugo's Way and all of these brokers, people traded based on the ticker tape. That's all they had. All they had was the ticker tape. And all the ticker tape was orders flowing inside the market. And investors would literally listen to the orders or read the ticker tape and the volume pumping into the market, and they would make trading decisions. If you heard that JP Morgan Chase was about to execute a $20 million order to buy yen, I think that would mean something to you. Okay. Now technology has advanced. Now we have charting software. We have all of these wonderful indicators to help us be better than the ticker tape. But we forgot the ticker tape. We didn't bring it with us. We didn't bring it along with us. That is the fundamental issue that I see in the market. Whatever you trade, whatever your strategy may be, add volume to it. Let me say this one more time. For the people in the back that think I'm attacking what you do, or you think I'm saying your strategy is not good, please listen to me. Hear my heart. Please hear me. It's not about that. I'm trying to help you. I'm trying to show you something. Add volume to your chart. Add an understanding of volume to your strategy, and watch your strategy grow incrementally. You know why? Because volume is nothing but activity, and activity is nothing but money. That's it. Volume is nothing but money. The market moves based on money. Buy orders based on money moves the market. Sell orders based on money moves the market. We can use moving averages. We can use indicators. We can use Fibonacci. We can use the cloud. We can use all of these other things to help us in understanding what's going on in the market. But when it's all said and done, underneath every candlestick is a ledger. And that ledger tracks buyers and sellers. That's it. So if you have an understanding of how the money is actually moving, it puts you in position to be superior in the market. It puts you in position to be superior in the market. Okay. What is this Dow Jones thing? What is it? And I think an understanding here will be helpful and beneficial. The Dow Jones is an average. The Dow Jones Industrial Average is known, we know it as the US30. All right. Any professional trader will know it as the Dow Jones or the Dow Jones Industrial Average or the Dow. They are the same thing. They have different symbols based on how you trade it. We traded CFD. Let me put this on here. I need you, if you don't understand some of these concepts and we can't walk it down tonight, go look it up. We traded CFD, contract for difference. That's what you're doing. When you enter a trade on the US30, you're trading it contract for difference. If you didn't know that, it's okay. It's a derivative. All right, it's a derivative. So go look that up if you don't understand what that particular concept is. All right, it's price weighted. All right, it's price rated. It's price weighted of the 30 largest American public traded companies. Price weighted, price weighted. I had no idea what that meant when I first heard it. All right, I had no idea what it meant. I'll talk about it in a second. All right. So it was created by the infamous Charles Dodd. All right. It is the most well-known U.S. stock index. All right. It's used to gauge the market's day-to-day performance. That's not completely the case overall. Why you say that? The S&P 500 consists of 500 companies in the United States. All right. Wouldn't you believe that 500 companies is a better test of how the overall economy is doing than just 30 small ones? So a lot of people have this understanding that the Dow Jones, for some reason, is the most powerful or the most indicative of what's going to happen in the market. I don't believe that's necessarily true. All right. I believe the S&P 500 is a better indicator because it's 500 companies, not just 30. And it's not price weighted. All right. We'll come back to what price weighted means. All right. So it's the second oldest U.S. market index. Okay. So originally it was intended to measure the movements of companies within heavy industry. All right. Construction businesses, businesses dealing with heavy products. However, very few of the index's 30 companies have anything to do with industrial goods. So even though it was intended to be about industrial goods in the beginning, now most of them don't at all. All right. Another important thing about the US 30 is the companies inside the US 30 actually change. A lot of people don't know that either. All right. The companies actually do change. Some of them get knocked out and some get placed in. Okay. So they do change. The big ones typically stay in at the top. All right. So it's 30 blue chip companies. All right. These are the ones that are considered the leaders of the economy. Boeing, United Healthcare, McDonald's Corporation, 3M, Goldman Sachs. All right. All in the US 30. They're all in the US 30. They're all there. All right. Here is the here's the updated overall list. All right. Apple, IBM, Intel, Verizon, Visa, Walmart, Coca-Cola, Chevron, ExxonMobil, DuPont, Nike. All right. Take a screenshot if you need to. All right. Take a screenshot of this if you need to. Okay. Now let's talk about the price weighted average. What does that mean? All right. The stocks with the highest share prices are given a greater weight in the index. This is going to be important to you. This is going to be important to you when you start looking at the US 30. I'm going to be breaking these things down in the US 30 Academy. All right. We're going to be piecing this puzzle together in the US 30 Academy. All right. So the higher percentage move in a higher price component will have a more impact on the final calculated value. So the higher the stock price in the individual company, the more it will move the US 30. Say it one more time. The higher the price of the particular stock that we're looking at, let's go back to the list. The higher the stock price, the more weight is going to be given in the overall average, the more it's going to move the US 30. Example. Here's an example. When Boeing was having issues, us that understood how the US30 worked, we knew that the US30 would have problems because Boeing is the #1 company currently in the US30. Write that down. Put that in your notes. Put it in your notes. Boeing is the #1 company in the US30. Put it in your notes. Okay? Put it in your notes. So since it has such a high bearing on the US30 because it is #1 and it is a price weighted average, we knew that since Boeing was having problems, the US30 would be having problems. Okay? All right, we've covered that already. All right. That was an example. So how's it calculated? All right. The key point about the Dow Jones is that it's not weighted on arithmetic average, nor does it represent its component companies' market capitalization, as does the S&P 500. It is different. It is completely different. It reflects the sum of the price of one share of stock for all of the components divided by a divisor. All right. There is a divisor. There is a number to, there is a number. They take all of the stock, they take all of 30 stocks, they have a divisor. They have a divisor, and that's how you get the number you see on your chart. The number you see on your chart is not a price. Oh, let me help you. Let me help you. It's not a price. It's not a price. The US30 is a scoring system. I'm gonna say that one more time. The US30 is a scoring system. It's gonna take all of the stock, all 30 of the stocks, has a divisor that it divides it by, and that's how you get the number on your chart, all right? That's how you get the number on your particular chart that you're trading. That's what you're trading. You're trading the fluctuations in that particular point system. It's a point system, right? It's an average. It's a number. It's not a price. It's not a dollar amount. It's not Forex. It's different. It's completely different, okay? It's completely different. So it's called the Dow divisor, which we talked about just now, okay? The Dow Jones tracks the 30 large publicly owned companies traded on the New York Stock Exchange and the NASDAQ, okay? It was created by Charles Dow to serve as a proxy for the broader US economy. They wanted to have some type of litmus test, some type of test of how the overall market was performing. It's before the S&P, all right? It's before the S&P, okay? So that's the summary, all right? The US30 is a scoring system. It's not a price. It's going to take the top 30 blue chip companies. It's going to take their stock prices and it's going to divide them by the Dow divisor. That's how you get the number in your chart. You are trading the fluctuations in that price back and forth, up and down, as those individual 30 stock prices change, the US30 change, right? So as you can imagine, if Boeing is going up, but one of the smaller companies are going down, Boeing's going to have more significance in how the US30 moves. But if you have enough of the smaller companies moving down, it could potentially pull, even though Boeing is going up, it could potentially pull the overall average down. Okay. Hopefully that makes sense. Hopefully that makes sense to you. All right. So let's go back and talk about how we got here. If you will recall, there's a couple of things. I'm going to pull up a chart in a second. We're going to look at it from a charting perspective, and I'm going to lay out from a chart perspective what I saw before it happened. But let's talk of fundamentals. All right. Since US30 is not currency, it is stock. All right. It's a group of stocks. That's what it is. It's a group of companies. All right. Put this in your notes. It is important to understand how the companies themselves are performing. Say it one more time. It is very important that you understand how the companies themselves are performing. You need their report cards. What are companies' report cards? How do we understand how a company is performing? Earnings reports. Earnings reports. Write it in your notes. Write that in your notes. Earnings reports. You don't know what they are? Research it. It's time to start doing homework. It's time to start digging deeper. It's time to take your learning to another level. All right? Earnings reports. So you go find the 30 companies, you go pull their earnings reports. You see how they're performing. Pull their report cards. Number 2, news. Fundamentals. Fundamentals. It's stock. It's stock. All right. What's the perception in the market about these companies? Are they having problems? Are there issues out in the market? Out just generally. Boeing had crashes and they had to ground all of these planes. That's going to play a role. That's going to play a role overall. What's going on in the world? Are there trade wars? That's going to affect US companies. Interest rates, inflation, all of these things. That's why it's important that you not just be a good chartist, but you are a good and have a good foundational understanding of how the markets work. You need to understand what tariffs means on a US company if you are to trade the US30. You need to have an idea. It will help you. It will put you ahead. It's not to say that you can't make some moves and grab some pips, whatever your strategy may be or your system may be, but we want to get you into a proactive position when you're trade, not a reactive position. We want you trading on the right edge of the chart. These things will help you better understand what you're looking at, and it's going to give you a greater level of confidence in the particular position. A lot of traders struggle for 2 reasons. They cut their winners early. They let their losers run. I don't know if that's ever been you or not. It used to be me. It used to be a lot of my students that I train now in my mentorship program. I don't want it to be you. And what I've found is one of the biggest reasons that happens is confidence. We don't trust our analysis. We know we saw it. We know it met all of the checklists. We know it crossed and it did exactly what we wanted to do, but we still don't understand what it's going to do next. And that anxiety fills us and makes us exit great positions. How many times have you done it? Where you literally exited a position and you had to come back and kick yourself because you missed out on more pips. You're not alone. I promise you, you're not alone. There's at least 80 people, other people on this particular call right now that have felt the same thing. I've done it before. All right. Sometimes I still do it. I'm a work in progress. All right. I've mastered nothing. I've just spent a lot of time learning and developing my skill set. That's all. Does it make me better than you? Does it make me greater than you? Does it make you greater than me? We're all on a journey together to help one another. Hopefully to help one another. Hopefully you're not in it just for yourself. And hopefully you're in it so you can create not only generational wealth for yourself, but also for other people as well. And hopefully this information I'm trying to give you tonight will be very beneficial to you. So let's pull up a chart. Let me grab my computer. I think it's important not only that you back test, but it's also important that you front test. When I say front test, you have to start training your eyes to the right side of the chart. Please hear me. Please hear me. You can't, going back in time will help you understand a concept. Understanding how to see to the right side of the chart will help you make money. Say it one more time. Going back in time will help you understand concepts, right? It'll help you get what you're looking for. It'll help you understand what has happened, and potentially that may happen again. Front testing involves you looking to the right side of the chart and trying to understand from a predictive value what may happen. And then you test whether or not you're right or not. This puts you in a superior position in this market. This is what I have my students do, so they can train their eyes to see to the right side of the chart. It is important that you start implementing that. So let's replay this before this candle got here. All right. So this is what April looked like. This is the chart I was looking at the time in which I looked at it. Okay. The first thing you will notice on this is just a naked chart. It's a naked chart. All right. All right. The first thing any trader would do is they will say, well, it's at resistance. Okay. I can buy that. I can buy that the price is at resistance. I can buy that. But the problem is, typically, sometimes at resistance, we truly don't have a real understanding of what's happening in that level. What's actually happening there, right? Drawing lines helps us to understand what may happen, so we can kind of trap the price off and have an understanding that this is a zone and price is reactive at these particular areas. But the question is, what is actually happening there, right? Because remember, we're talking about trying to get as much information as possible so we can be objective as traders. We don't want to just draw lines and hope that it bounces off the line if you're trading in size. If you're trading something so volatile, you can't afford, as a trader, you can't afford to hope that it bounces off this resistance, enter a position, and the market shoots up on you. US30 will blow your account. Maybe in regular Forex, you can do that. US30 will blow your account if it did that. All right. If you sold here with an anticipation that the market going to come down and it shot up on you just a little bit, because it does wick sometimes, you're going to be in trouble. All right. You're going to be in trouble. So what do? We add volume to the picture. We add money. Let me say that. Let's just start calling it money. I'm gonna call Clint and say, hey, Clint, we have to change it. We're gonna have to change it to money. People understand money. All right, we're gonna add volume. We're gonna add volume to the equation, so we can understand, where is the money at. That's what I need to know. That's what I'm always looking for now. Where's the money? That's what I want to know. Where's the money? Because the money tells me what is the interest? What is the sentiment of the big money? That's what I want to know. What is the sentiment of the big money? That informs my decision making. That informs my trading. If I can understand what the big money is about to do, maybe I can do what they're going to do and I won't be in the way of them. Some of you are catching falling knives. You're stepping in the way of a bullet train, and you don't even know it. You don't even know you're stepping in front of a bullet train. And the reason you don't know it is because you don't have any volume on your chart. I'm going to give you a resource when we get done, so you can go read, if you will read. Okay? All right. So these things help us. Drawing trend lines, all of those things, they help us. But will they make you comfortable? Will they make you comfortable? Will you truly know from an objective position what is really going on? Volume allows me to do that. Volume tells me, when I look at this particular chart, when I was looking at this particular chart, volume told me that this was a weak market. Volume told me that this was a weak market. It was a very weak market. All right. It was rising on nothing, as I like to call it. All right. As prices were increasing, the big money were withdrawing their interest. They were taking their money out while others were putting their money in. This is what happens to us consistently. since we don't know how to track the people that's moving millions and millions of dollars through the market, we don't know when they have changed their minds. We don't know when they've said they've had enough. Since we don't know that, because we have typically no volume on our chart, we get stuck in front of a freight train. We get stuck in front of a freight train, okay? So this was my first indication that we had problems, all right? My overall sentiment anyway was to the downside from October. Over here, this Yao Ming candle. If I scroll in all the way back to 2003, over here, you will see that there's no candle that big anywhere on this particular chart. It doesn't exist. Does not exist. Does not exist. It's not there. That told me that somebody had woken up and they were interested in something other than higher prices. They didn't want higher prices. They don't want higher prices. They didn't want it. You know why I know they didn't want it? Because if they wanted it, they would have pumped all this volume in and they would have pushed the market up. They did not do that. What did they do? They pushed the money in to drop the market. Do you see it? They pushed money in to drop the market. Somebody did that. It's intentional. And that's the thing that you have to understand. Nobody's going to move millions and millions and millions of dollars unless they mean it. They weren't playing. They were serious about moving the market lower. They did it. That told me the overall interest was lower prices. The interest was lower prices. They were interested to pull the market lower. How do I know? Let me show you something else. Show you one more thing here, and we'll move. One more thing. Price moved up here, but we had a decrease in volume here. I've seen this before. I've been here before. I've watched the same thing for over a year. I've seen this story play out over and over and over again. See, there's no substitute for time and hard work. It pays dividends. I mean, it literally pays you dividends. Increase in prices, decrease in activity, decrease in money, decrease in interest. They don't want higher prices. If they wanted higher prices, they would have pushed volume in to get higher prices. They don't want higher prices. So what do they want? They want lower prices. See, I understood that since October. I've understood that since October. All right? I called this drop right here. I called this drop. I called this drop live. You can go find the video on the Powerhouse. I called this move up live in the Powerhouse. I said, do not sell here. Do not sell here. Christmas Eve, do not sell here. Go watch the video. The candle was all the way down here. The day after Christmas, record day in the market. Record. Pull back the other way. Everybody got caught selling here. Everybody sold here. We were buying. We were buying. Go watch the videos. We're talking about front testing. We're talking about understanding what's going to happen before it happens over here. See, because the truth is, anybody can teach you to the left side of the chart. My buddy Mike Waller taught me that. Anybody can teach you to the left side of the chart. Who can teach you this? See, because this side of the chart has your money. Your money exists on the right side of the chart. See, it's before everything happens. It's not the back testing. It's not the old stuff. That was somebody else's money. That ain't none of my money. I can't do nothing with that. I need all of this right here. See, all of this is yours. All of this is yours. And that's why it's important that you dedicate yourself to your education so it can be yours. not just theory about it being yours. It can be yours, but it's not going to be yours if you're strategy hopping. It's not going to be yours if you're chasing the next best thing and the next shiny new toy. It's only going to be yours at the moment you decide to be a student. Weakness. This was a weak market for many different reasons. And as you can see, I have not put one indicator on my chart. I didn't have to. Because I had money. I'm following the money. Put it in your notes. Follow the money. Put it in your notes. Follow the money. Follow the money. Because in the end, the only thing that's going to matter is the money on this chart and the fundamentals, what's happening in the world. But if you don't understand what that means outside of a red folder, dig deeper. Dig deeper. If anything, I want you guys to commit yourselves to really doing this because I want you to win. I want you all to win. So yes, it was at a point of resistance or it was at the top of the market. Yes, it was. I understood that. But I also understood where the money was. That's what I was looking for. I was looking for, where is the money? Where does the money exist at? And what does it mean? What does it mean? Where is the money at and what does it mean? Interpreting the money. Let me do this really quick. Purple. Let me build this. Let me build this case really quick. Green. Red. Blue. All right. That's prettier. I like that better. Okay. So this is volume 2. This is money. I use volume at the price. Some other people use session. My mentor used session volume. Clint uses session volume. I use volume at the price or visible range volume. Let's open it up. I want to show you this. We'll talk about this for a second. I'm looking on time. All right, I got a few more minutes. All right, I got a few more minutes. Where is the money at? This is money. This is money. These are contracts. These aren't lines on the chart. This is money. This is money. This tells me how much money exists at each price. Listen to me. Please hear me. This tells me how much money exists at each price. It matters. It matters. I bet you it would help you if you understood how many buyers and how many sellers existed at a particular price. It will help you. I bet it will help you if you understood that. This is called visible range volume. Put it in your notes. Put it in your notes. My teacher taught me this. Mr. Clint Eastman taught me this. All right. I'll be teaching on this in the US30 Academy. All right. So understanding the volume, understanding the point of control, which is right here. Let's change the color on the point of control really quickly. Let's get another color. Let's try yellow. Brighter yellow. Brighter yellow. Okay. Let's thicker line. Okay. Understanding that this was the point of control. This was the point of control here. Understanding I was in a weak market based on money. Based on money, I was in a weak market. I drew a candle. I shaded it in. And I drew me a volume node. Because I understood the money. I understood that every opportunity that the big money would take to push the prices lower, they would. Listen to me. Please listen to me. Hear me. I understood that every chance they get to push price lower, they were going to take it. They were going to take it. They were going to take it. They were going to get help to do it, because markets fall faster than they rise. So April the 30th, when I was sitting back analyzing everything, it was not hard for me to understand what was going to come, what was going to happen next. You can do it too. And I think that's the most important piece, right? Not a rocket science, have no background in financial anything. I've never seen a chart before until a few years ago. But what I've done is I've dedicated my time, my energy, and my efforts to being a student, not a strategy hopper, not chasing the next shiny best thing, and more importantly, not chasing money. Some of you have not given yourself permission to be students. It's problematic because you're so busy focused on making the money now that you're sacrificing the skill now. That will hurt you long term. Because in order to be able to thrive consistently in this market, our job is to become consistently profitable. That's our job. You're here because you want to find out, how can we crack this particular nut? How do we do it? How do we get there? I'll tell you how to get there. You study. You put your accounts down and you study. You put your energy in to finding high quality value education that can take you deeper. My middle school teacher wasn't my high school teacher. My high school teacher wasn't my law school professor. It is important that you're attaching yourself to people that can elevate you. There's plenty of trainers in education and plenty of companies out here that can help you. I'm not making a pitch for any one of them. I'm not even making a pitch for me. I want to help you. Hopefully, some of this information that I've imparted into you this evening has helped you. I will be creating an academy. It's going to be focused just on this. It's going to be focused just on that. It's not Forex though. I'm going to be teaching Forex. It's not Forex. It's US30. It is stock, not Forex. It's different. It's a different animal. It doesn't mean you can't take your foundation in Forex and win. You can. It will help you. But if we add some things to it, that will potentially make you a monster. Because everybody knows US30 moves faster than any currency pair. It's very volatile, which means the opportunity is great, which also means the risk is great. Some of you have brought your Forex risk into the jungle of US30, and it's not working out so well. You have to understand it is a different animal. It is a different monster. But with education, foundation, 100-year-old strategies, I guess if you want to call volume, it's the 100-year-old strategy. It's 100 years old. It's older than everything else because it was first. It was just orders. It was money flowing into the market. With that understanding, piecing all the things that you had together, understanding what tariffs is, and when there's a embargo or sanctions being placed, or trade wars going on, how that affects our economy, all puts you in position to win at a higher rate and a higher speed. Guys, it has been a pleasure to be with you this evening. Hopefully something I said tonight will resonate with you. Something I said tonight can help you. If you're not in a powerhouse, I invite you to join the powerhouse. We exist to teach people how to trade and to enhance their lives. Come, learn something. The US30 Academy is coming. We're working on it. We're putting it all together. We're putting the pieces of that puzzle together to ensure that we're giving you a robust education on how to trade the US30. Also, the indices heat wave, it is available. Go check it out. Get you a copy. If you're familiar with the currency heat wave, it is made by FX Labs. It is a collaboration between me, FX Labs, and my mentor, Mr. Clint Eastman. We all put it together. You can go to their website, indicesheatwave.com. You're going to see me listed on their website. The things that we do for you or that we're trying to produce to you, hopefully will help you generate the generational wealth that you want to create for yourselves and your family. Hopefully, you will make the decision to become a student and learn the skill of Forex, not chase every shiny new toy. All right? So guys, thank you so much. Thank you for being with me this evening. Hopefully I'll see you on the next webinar. Please go to my new page, US30 King, and like. And if you've gotten any value from anything that I've said, or you believe what I'm doing, the work that I'm trying to provide for you is valuable, I encourage you to go write a testimonial and tag me on Facebook. I really appreciate you guys being here. You guys have a fantastic evening, and I will catch you on the next webinar. Thank you for being here. Thanks.